6 years after the Central Bank of Nigeria, CBN, rolled out the global standard instruction, concerns are mounting over gaps in its implementation. While commercial banks can recover overdue loans across the customer accounts, fintechs and also microfinance banks say they remain excluded, a situation that is worsening default and exposing cracks in Nigeria's credit recovery framework. Now, joining us now to break this down is a tech expert, Obamwoyin. Glad to have you join us.
Thank you.
Now, let's begin from the basics now. What was the original goal of the global standard instruction introduced by the CBN, and where exactly is the gap today?
The global standard instruction was originally implemented by the Central Bank of Nigeria to reduce the non-performing loan in the Nigeria financial system. In 2020, the NPL rate was increasing, which was above the Central Bank of Nigeria's rate, which is 5%, and as at that time it was 6%. And one of the framework that was introduced in the global standard instruction. So what that means is that banks, commercial banks or lending institutions can recover loans from borrowers even without the second consent. And since 2020, this has been implemented over time. But the risk or the side effect to that today is that these are only be implemented by the commercial banks, leaving the fintechs and many microfinance banks behind, and that has hugely impacts the NPL across the financial lending markets in the system. So I think originally this was to reduce the non-performing loan in the system and also to improve the practice of lending in the system.
And how significant now is the exclusion of fintechs and microfinance banks now from this GSI platform in terms of rising non-performing loans?
The impact is used because they are excluded. And mind you, in 2025, just to quickly state that over $800 million was given out as loan by the fintechs and the microfinance banks. So when you look at that figures and looking at the cost of recovering those amount of money in the system, it's huge, and that has given rise to the non-performing loans as regard when you look at the other fintech sector alone. And because the GSI is one platform that many commercial banks are taking advantage of right now to recover loans if borrowers fail to pay back the money they have collected. But however, because there have been slow implementation or integration from the central bank to include fintechs in that system, this has seen a huge setback by the fintechs and many microfinance banks. And just looking at the data before me, I realized that the NPL in terms of this segments of the lending institution have been increasing over time. So yeah, the GSI have a huge impact because the fintechs have been left behind. Even the compliant one have been left behind in this system. I think that is not a really good thing when you look at the Nigeria financial lending system currently.
And now there's the saying now that that's what's going around, that some borrowers deliberately move their funds to institutions outside the GSI framework. Now, how systemic now is this loophole?
It's not potential. It's very systemic because it's obvious that only the commercial banks have access to the GSI platform. So if I'm to be a borrower and I borrow money from the commercial bank, knowing fully well that if I move my money from First Bank and I put it in Kuda or OPay, you won't be able to even track me. So this is a systematic way where borrowers are taking advantage of that. And I think it's not right because most of these borrowers, they deliberately just don't want to pay back loan because they know that what happens is they are not able to track them. And I think this is an aspect that the central bank have to look into if you want the financial system or even the lending system to grow. That is something that it's deliberate, if you ask me.
Now, do you have, why once you are borrowing, you have the issue of, submitting of your BVN, all these credit bureau checks now. Now, even with those tools, defaults still remain high. Why aren't those, using a BVN or submitting a BVN or national identity, why are they not sufficient?
Yeah, the answer is not far-fetched because the BVN and the Bureau are just part of the problem, but they don't fully solve the problem. So what the BVN does is to identify identity fraud. So when somebody's BVN is being taken, what he's doing is just to make sure that you are lending money to the right person and there are no impersonations in the system. And the credit bureau's reporting system just shows an historical data of an individual. So it doesn't tell the future occurrence or if this person will be able to pay the loan that he borrows in the future. So what I think happens is that the BVN and the credit bureau does not really solve that problem. They all provide risk assessment operations in the process and at the beginning of borrowing those loans. That alone doesn't really solve the default rate. Default happens when borrowers are refusing to pay back the loan already borrowed, and some of this data doesn't really tell that when I borrow money, I'll have the capacity to pay in the future, even though you have access to my historical data, And secondly, some of these lending institutions does not have access to a bureau database. So they depends on their internal system or predictive technologies that they are put in place. But that again does not really solve if a default rate is going to reduce or not reduce. So there have to be additional frameworks for the default rates to reduce if you want to solve that issues. So BVN doesn't really solve the problem, and yeah.
And now on the final, what do you think can be done? Final, just very brief. What do you think can be done? What do you think these institutions can actually do to actually assist them, in meeting up these offenders and get back their funds that have been lended out?
I think it has come to a point where the CBA need to fasten how integrate the fintech and the microfinance banks into this system. Because again, one recommendation that I will make is that there are already compliant fintechs and microfinance banks that are following the Nigerian data protection laws and the governance laws. And if these are properly integrated into the system, I think the default rate or the NPA will reduce, and that is one important aspect that the CBN have to look into. And finally, on the note, I want to also state that we should also look at consumers' rights. There have to be strict consent in that process to make sure that surprise debits are not always getting there. So I feel that is some of the recommendations that should happen. Thank you.
Yeah, thank you very much for joining us for this brief moment. But due to time constraints, we can't really dive more. Glad to have you joined us.